Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. I'm back. I was ill yesterday, very ill, very unhappy. Nevertheless, we reported last night on the disaster of Palantir, Alex Karp, disgusting behavior. And this morning, I'm up and ready, and I am with it for Texas Pacific Land, the earnings call. And at the same time as I bought $39,000 worth of Walmart this morning. Sold all of my S&P on my Roth IRA. To be clear, on my Roth IRA only. I do not sell on my main account. My Roth IRA, it's tax-free. And I've done the same thing for Coca-Cola. I've done it for many things, McDonald's, E. coli, and so on and so forth. And now I've just done it for Walmart. I've just bought $39,000 worth of Walmart. I've got my sell order already in place. If it takes me a day, a week, a month, it doesn't matter. It will outperform the S&P because it dropped 10%. I had a 10% discount. All right, okay, and I like the earnings. They beat on earnings and everything is fine. Okay, so there you go. But we're focusing on TPL this morning. It's kind of strange, really. I should be focusing on Walmart, shouldn't I, as I've got all my money in there. But I think this is the one that you want to see most. And quite honestly, I don't need to watch the earnings. I know what they're going to say. And I'm very confident with my position, so I ain't bothered anyway. All right, let's be honest. That's the definition of investing. You understand exactly what you own. You don't mind walking away. All right, so Texas Pacific Land, I will report to you and tell you they had a nice earnings this morning, one of their best, moving back up again. Massive improvement from Q3. Very nice indeed, and $5.14. And we are doing well this morning with Texas Pacific Land. I've always said this is one of my favorite stocks to own. It is. You own the United States. You own where all the Elon Musk, Trump solar panels are going to go, and all the rest of it. You want to own the land that pays you the rent to work that land. That's why I like it. We're 10 minutes to go before the call begins. So welcome everybody. Let's get everybody into the chat. Let's welcome everybody here. We are early, so I'm sure it's surprised a few of you. Let's see who's here first of all. Good morning, Lawrence Teo. Good morning to you. We had you on the show a couple of days ago. That was a great surprise. Thank you ever so much indeed. Good morning, Stephen Lewandowski. Morning, friends. Limus, good morning to you. And the big M is live. How you feeling? Much better today. Thank you for asking. All right. Of course, today is the big day, the XRP action day. If you know, you know. You don't, you don't. And if you don't, where have you been? A gross profit margin down 90%. Oh, my God. Gross profit margin down 90%. Good morning, Lawrence. On what stock are you talking about? What stock are you talking about? Good morning, Patrick Black. Good morning to you. Good morning, Art Caffeine. Good morning to you. Welcome, everybody. So I'm watching my Walmart very closely this morning. I've got a sell order already in place at 103. It'll be about a $3,000 profit. It's not a matter of if, it's a matter of when. I can leave it a day, a week, a month. It doesn't matter. If it goes a month, it will get the dividend as well, which will be an extra bonus. It doesn't matter at all. The S&P, I sold at an all-time high, took the profit, and bought a 10% drop on Walmart. On my Roth IRA. So I'm very happy with that. Yes, indeed. Okay. So let's get ready to rock and roll. Walmart, I'm keeping my eye on. It's just I'm already in profit from it, from buying the bottom. But I'm going to sell it at 103. 39. I'll put it on the screen. In fact, I want to focus on this at the moment. So this is Walmart. Let me show you on the screen. This is what I did. Where am I? Where's my screen's gone? There we go. So Walmart dropped, massive drop this morning. I bought here $39,000. Just there, sorry. $39,000 there this morning, and I'm selling it when it gets to around about here. So if it takes longer, it doesn't really matter. I actually thought it sold a few minutes ago, but you never get that chance. It popped to 104 but it was so quick. Buy orders do not get filled that quick. And not when you don't have, when you have Robinhood, they don't anyway. They do for those in Wall Street, but they don't for me. So anyway, we're watching Texas Pacific Land at the moment. So welcome, good morning to you. I meant based on Seeking Alpha, TPM gross profit is more than 90%. Is more than 90%. Did I read it in error? Let me have a look. What are you looking at? TPL. Okay. TPL, Texas Pacific Land. Let's have a little look. Texas Pacific Land. The short interest is 5.87. The forward PE is 72. It's expensive. It's always going to be expensive. I'm not seeing where you're seeing that at the moment. Let's have a look. Okay, Texas Pacific Land, GAAP EPS $5.14, revenue of $185 million. Let's have a look. Revenue 185. Record oil and gas royalty production of 26.8 thousand. Trying to see where you're seeing it. Total segment 260 million. Total segment net income 139 million. Adjusted EBITDA 610.7 million. Free cash flow 461 million. I don't see anything there of any major concern at the moment, but we'll keep my eye on it. And we've got 5 minutes to go before the call starts. I'm sort of watching Walmart as well because I want to take a trade on that. Walmart's value proposition in an inflationary environment continued to resonate with an increasing number of consumers as the retail giant's revenue increased 4.2% in the fiscal year, driving profits up 10%, both of which beat Wall Street expectations. Shares of trading defensively. However, the company's top outlook quarter failed to meet Wall Street's lofty expectations. The slide in Walmart share price following the release of its Q4 results could be attributed to its premium trading valuation and the lack of associated wiggle room. Nonetheless, Q4 results show that Walmart is still able to demonstrate sales, and that was an overreaction. Comparable sales, yes, including all fuel stations, yes, increased 4.6. Yes. That's fine. I've got no problem with that at all. Buy, yes. Hold, yes. Yeah. I'm happy with that. Okay, let's see who's here. Good morning, Martin. Glad you're feeling better. Thank you, Joseph Kelly. Appreciate it. Good morning, Eugene. Thank you for all your posts on everywhere, in fact. Not just Blue Sky, but X as well. Thank you so much indeed. Appreciate you a lot. You're doing great for the channel. Okay. So we've got, how long have we got now? We've got 4 minutes to go. If you've just tuned in, tap the like button and consider subscribing to the channel. Texas Pacific Land earnings in 3 minutes. Let me check around the studio. Make sure we're all good. Yes, we are. Everything's cooking on gas. Good morning to you. Nice to see you feeling better. Thank you. Yes, I am. Leah really took care of me yesterday, and I'm 100% better. It's great when you feel. Isn't it great when you feel better? You just feel better than you were before. It's like, oh my God, this feels so much better. No head and horrible. It's really good. It's a really good feeling when you actually feel better. Anyway, I hope today's busier than this. I've only got 41 watching. Very disappointing. It's a really, really important stock, this one. It's basically buying America. But people don't understand that, which is a shame, but there you go. It's not sexy enough, is it? That's the trouble. People think it's not sexy enough. there you go. No worries. Oh, my God, he's back. Lawrence Teo. Lawrence Teo is gifting memberships again. Look at this. Please do thank Lawrence Teo. If you've just won a membership, he did this a couple of days ago. Please do. Huge thank you to you guys. Liam Laffey, you just won a membership. Congratulations. Please do thank Lawrence Teo for doing that. He's used his hard-earned money to give you the benefits of this channel, which is absolutely fantastic. So there we go, a new member. Danny, a member as well. Please do thank Lawrence Teo. There's 5 being donated this morning, which is absolutely incredible. Please do say thank you. Absolutely amazing. Oh, there's another one. Vior, you just won membership. This has been donated to you by Lawrence Teo. One of our members, he's just supported you. He's been a member for 2 months now, and he would like to introduce you to the membership. So that's why he's done that. Oh, there's another one. Delirium, you've just won a membership as well. We've got 1 minute to go before the call starts. Doesn't work, doesn't give to those who are active in the chat. It does, Lawrence. Basically, everyone, it's those who have engaged. And Jan Lernby Jan has also won a membership. What it does, it gives it to those that have commented and stuff like that. But if everyone in the chat is a member, it goes to those on the channel. So there you go. It's incredible. Right, I've got 30 seconds to go, so I've got to get back to the call. Thank you, Lawrence Teo. It gives to those who engage with the channel. That's how it works. Good morning, and they all know that you have donated to them, so hopefully they'll say thank you when they come in. Good morning, Martin Top Man. Good morning to you. It's actually savings because I pulled all my options after you talked about PE of Palantir. Oh, yeah, I'm glad you took profit. Alex Karp should be in jail. I mean, his behaviour is beyond despicable. Right, here we go. There's the audio. There's TPL audio coming through. We're waiting for the call to start. Expect it to be a minute or so late. I can hear the call. They're not showing any presentation. There is just this audio feed. So you're not going to miss anything at all. I'm going to cover it all. Mute that. Oh, yeah. I don't copyright on the channel. So there you go. Got to be careful of that sometimes. Tech Pacific Land, a minute or so away. For those of you just tuned in, I sold all my Roth IRA this morning and bought a 10% drop on the on Walmart this morning. I'm happy to own it and wait a week or so, or a day, or whatever long it takes. I will sell at 103, and I'll take my profit. It'll be about $3,000, and buy back in the S&P. The S&P is not going to make 10% in the next week or so. Right. Okay. Stand by for the earnings call. Buying Walmart 2 today. Yep. Yeah, I bought $39,000 worth of Walmart. All my Roth IRA. I'm very happy to do that. I don't even need to listen to the earnings call. I'm more than happy to own it. As long as it takes. Right, okay. We're on standby for TPL earnings. Standby. They're playing some music. Just stand by. We're waiting for the call to begin. It's perfectly normal to be 1 or 2 minutes late. Congratulations, Stephen. You buying it as well? Yeah. Yeah, I'm happy with that. very slow morning this morning, only 62 watching. I thought there'd be more than that. There will be this afternoon. You wait for the XRP thing this afternoon. We're expecting 10,000 people for the launch. Here we go.
Texas Pacific Land Corporation fourth quarter 2024 earnings call. At this time, all participants are in a listen-only mode. A brief question-and-answer session will follow the formal presentation. If anyone should require operator assistance during the conference, please press star 0 on your telephone keypad. As a reminder, this conference is being recorded. It is now my pleasure to introduce your host, Sean Amini with Investor Relations. Thank you. You may begin.
Thank you for joining us today for Texas Pacific Land Corporation's fourth quarter 2024 earnings conference call. Yesterday afternoon, the company released its financial results and filed its Form 10-K with the Securities and Exchange Commission, which is available on the investor section of the company's website at www.texaspacific.com. As a reminder, remarks made on today's conference call may include forward-looking statements. Forward-looking statements are subject to risks and uncertainties that may cause actual results to differ materially from those discussed today. We do not undertake any obligation to update our forward-looking statements in light of new information or future events. For a more detailed discussion of the factors that may affect the company's results, please refer to our earnings release for this quarter and to our recent SEC filings. During this call, we will also be discussing certain non-GAAP financial measures. More information and reconciliations about these non-GAAP financial measures are contained in our earnings release and SEC filings. Please also know we may at times refer to our company by its stock ticker, TPL. This morning's conference call is hosted by TPL's Chief Executive Officer, Ty Glover, and TPL's Chief Financial Officer, Chris Steddum. Management will make some prepared comments, after which we will open the call for questions. Now, I will turn the call over to Ty.
Good morning, everyone, and thank you for joining us today. Fourth quarter closed a remarkable year as TPL set records across nearly every key operating driver despite sideways crude oil and natural gas prices. Year over year, 2024 oil and gas royalty production volumes increased 14%, water sales volumes increased 31%, and produced water royalty volumes increased 37%, with all three of those performance indicators representing corporate records. Our strategic investments into people, technology, and infrastructure are paying major dividends as our surface and water revenues were collectively up 23% year over year. In addition, last year we acquired over $400 million of high-quality Permian mineral royalty, water, and surface assets, providing TPL with additional growth lever. The cumulative impact of all these successes culminated in record shareholder return of capital in 2024, with a combined $376 million returned via dividends and buybacks. It was very simply a great year. I'd like to focus my prepared comments today on three topics. First, a debrief on the Permian during 2024 and an outlook for this year. Second, a description of our latest efforts towards next-generation opportunities. And lastly, an update on our produced water desalination and beneficial reuse endeavors. Starting with the Permian. Despite a steady decline in rigs throughout 2024, Permian oil and gas production exited last year at record highs. According to Baker Hughes, Permian horizontal rigs peaked at around 345 in the first half of 2023, which then declined to about 300 entering 2024 and exited the year around 290. However, as the industry has demonstrated time and again, operators continue to find efficiencies through innovations such as longer laterals and multi-formation pole development. Based on preliminary industry data, on a full-year basis, despite the average rig count in the Permian being down about 8% from 2023,
I'm
the
making
number of
money on
spudded wells
Walmart
was
now.
down only 2%. Furthermore, well laterals were approximately 5% longer year over year, which translated into 2024 having approximately 3% more drilled lateral feet compared to 2023. The net of all this, Permian production still managed to grow approximately mid-single-digit percentage exit to exit from fourth quarter 2023 to fourth quarter 2024. Looking ahead to 2025, we see a constructive outlook for the Permian. Fourth quarter 2024 new permits basin-wide were up approximately 20% year over year on a simple count basis and up 24% year over year on a total lateral feet basis. The Matterhorn pipeline coming into service has helped to ease the bottleneck on natural gas takeaway, which should help reduce basin differentials and improve price realizations. This is especially meaningful for the Delaware Basin, where gas and NGLs production splits in certain subregions can, in aggregate, represent over 60% of a well's energy content. We still see a healthy inventory basin-wide of drilled but uncompleted wells, otherwise known as DUCs, where we estimate current DUC counts of less than 2 years of age to be roughly equivalent with levels from 2023 and 2022. Current Permian rig counts should be able to generate growth assuming new spuds are turned to sales on normal development cadence and not used to build excess DUC inventory. Of course, Permian development and production will still be heavily influenced by the price of oil, and the ultimate path of crude oil prices over the course of 2025 will likely dictate whether activity accelerates or slows down. Next, I'd like to discuss TPL's efforts beyond our legacy oil and gas business. Over the last few quarters, we've seen a robust increase in interest towards the development of data centers, power generation, and grid infrastructure. As we've discussed in the past, the Permian's vast hydrocarbon and non-hydrocarbon resources make it an attractive option for developing energy-intensive assets. Our years-long efforts to attract substations, renewable projects, battery storage, and other infrastructure, combined with our leading source water network, our emerging produced water desalination technology, and our sizable oil and gas royalty position, has positioned TPL to take advantage of emerging opportunities. We believe that just owning the land itself is not sufficient to create durable incremental value. Rather, by also bringing other major elements such as high-spec freshwater, access to grid infrastructure, and availability of hydrocarbon and renewable energy, we can participate in the value chain as these next-gen industries emerge and capture commensurate value as they grow and mature. Our approach to these new opportunities is not unlike our approach to the Delaware Basin water business nearly a decade ago. Back then, at TPL, we saw a budding business opportunity with an uncertain competitive landscape and fragmentation among developers and operators. We ultimately executed on a strategy to exploit TPL's latent advantages. We moved away from the liquidation model that the trust had employed for over a century and instead proactively hired experienced personnel and invested growth capital. We're just as willing today to commit resources to these potential new opportunities, especially in domains where TPL has a competitive advantage. We continue to make progress on this front, and we will share more as we reach certain milestones. Turning to our produced water desalination and beneficial reuse endeavors, we have begun construction of our 10,000 barrel per day test facility, which we refer to as Phase 2B. Equipment is currently being assembled at our manufacturing partner's facility, which is located in the U.S. The desalination equipment will be commissioned and tested there, and once it satisfies specifications, it will be sent to Orla, Texas for final installation. We still expect completion of this facility in the middle of this year. We expect the total cost of Phase 2B to be approximately $25 million, having spent approximately $7 million in 2024, with the remaining balance to be spent this year. We also have an option for a behind-the-grid gas-to-electric generation that would be tied into a nearby pipeline, which would require additional capital investment of approximately $10 million. In addition, our engineers are studying various costs and efficiency opportunities as our freeze desalination process provides potential synergies if co-located with other industrial or power generation facilities. In advance of the completion of our Phase 2B desalination facility that will produce both freshwater and a concentrated brine solution, we are advancing with multiple beneficial reuse initiatives. We expect to receive our second land application permit from the Texas Railroad Commission for an approximate 100-acre plot in Orla, Texas, where we plan to undertake a restoration project to restore native brush grasses, reintroduce quail to the area that will be irrigated with fresh water produced from our desalination system. This plot itself would be able to accommodate the entire freshwater output from our Phase 2B desalination facility. Additionally, early last year, we submitted an application to the Texas Commission on Environmental Quality, otherwise known by its acronym TCEQ, to discharge treated desalinated produced water into the upper region of the Pecos River. That technical review is progressing, and we have been responsive to questions and requests from regulators. We hope to have that permit this year. We are also looking to leverage the ability to source substantial quantities of highly purified desalinated freshwater or ice that might be a critical resource for various industrial uses. Finally, I want to thank all the employees here at TPL. Not many energy companies can claim that fiscal year 2024 was their best year ever, but for TPL it was. And that is owed to the dedication, collegiality, and talent of our employees. With that, I will hand the call over to Chris.
Thanks, Ty. For full year 2024, we generated record free cash flow of approximately $461 million, which represents an 11% year-over-year increase. Full-year performance benefited from higher daily oil and gas royalty production, which increased 14% year-over-year, higher water sales daily volumes, which increased 31%, and higher produced water royalty daily volumes, which increased 37%. Of the approximately 26,800 barrels of oil equivalent per day for full year 2024 royalty production, acquisitions that closed last August and October contributed approximately 1,100 barrels of oil equivalent per day. Consolidated results were partially offset by lower realized oil and natural gas prices, which declined year-over-year by 2% and 48% respectively. Consolidated revenues during the fourth quarter of 2024 were approximately $186 million. Consolidated adjusted EBITDA was $161 million, and adjusted EBITDA margin was 87%. Diluted earnings per share was $5.14. Fourth quarter 2024 royalty production of approximately 29,100 barrels of oil equivalent per day represents an 11% increase compared to the same period last year and a 3% increase sequentially as activity remains robust in our Loving County, Central Midland Basin, and Northern Reeves County subregions. Quarterly produced water royalty volumes grew 8% sequentially and 44% year-over-year to approximately 4 million barrels per day, benefiting from our new volumes into our out-of-basin pore space in Andrews County that we acquired in 2023. Source water sales volumes of 737,000 barrels per day grew 2% sequentially and 42% year-over-year, with demand for treated water especially strong during the quarter. As of quarter end, we had 6.4 net permitted wells, 13.2 net DUCs, and 3.0 net completed but not producing wells. That amounts to 22.6 net line-of-sight inventory. We believe this level of near-term inventory can support near and medium-term production growth above overall Permian production growth. Permit and spud activity have been especially strong in our Culberson County royalty acreage. The top 6 companies operating on our DUCs are currently Chevron, Coterra, Exxon, Oxy, BP, and EOG, which in aggregate represent approximately 71% of TPL's total DUCs. With regard to capital allocation, in 2024 we deployed a record amount of capital towards highly accretive M&A while simultaneously investing in our water business and returning a record amount of cash back to shareholders through dividends and buybacks. Looking ahead to this year, because of our high-margin business model, fortress balance sheet, massive Permian royalty and surface acreage footprint, talented commercial team, and innovative engineers and scientists, we have both the financial wherewithal and opportunity to invest across numerous avenues toward generating long-term value while also returning substantial cash back to shareholders. Yesterday, we announced a regular dividend of $1.60 per share, which represents a 37% year-over-year increase. We expect capital expenditures in fiscal year 2025 to be approximately $65 to $75 million. This includes approximately $28 million for our produced water desalination and co-located gas generation. The balance of CapEx for the year is primarily for our brackish source and treated water business. CapEx toward the higher end of the range would be predicated on growth opportunities should upstream activity ramp in and around our footprint. With respect to M&A, we still see ample opportunity to consolidate Permian minerals, royalties, water, and surface assets. Our focus remains on assets that are at least as good or better quality than our legacy asset base, and any acquisition would be intentioned on enhancing and maximizing intrinsic value per share. Acquisitions over the last couple of years serve as a good example of what this M&A growth lever can provide shareholders. The minerals and royalties we purchased last year are contributing a double-digit percentage uplift to production, while also substantially augmenting our near-term and long-term well inventory. Acreage and pore space acquisitions in Andrews and Winkler County are already driving significant produced water volume growth, and these assets are especially critical towards providing the industry with out-of-basin disposal options. Recall last year we announced a target cash and cash equivalents balance of approximately $700 million, where above this level, TPL will seek to deploy the majority of its free cash flow towards share repurchases and dividends. Our balance sheet still has zero debt, and our current cash and cash equivalents balance at year-end was approximately $370 million. Though I would add, nothing precludes us from accelerating shareholder return of capital, even if we're under that $700 million level. In summary, we'll continue to be thoughtful and opportunistic with our capital allocation as we remain focused on maximizing shareholder value. The legacy business is performing incredibly well. We have a multitude of exciting growth opportunities in front of us, and we have the team, business strength, and balance sheet to execute. And with that, operator, we will now take questions.
Thank you. We will now conduct a question-and-answer session. If you would like to ask a question, please press star 1 on your telephone keypad. A confirmation tone will indicate your line is in a question queue. You may press star 2 if you'd like to remove yourself from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. Once again, that's star 1 at this time. One moment while we poll for our first question. Our first question comes from Derrick Whitfield with Texas Capital. Please proceed.
Good morning, Ty and Chris, and congrats on your progress during 2024.
Thanks, Eric. Good morning.
Also, certainly thanks for the update on water and some of the next-gen opportunities you guys are discussing. Maybe starting there and referencing page 33 of your presentation, could you further elaborate on the potential desal synergies with behind-the-meter power generation and data centers and how advanced your discussions are on this opportunity?
Yeah, sure. Robert, you want to take that one?
Sure. I think when you look at all the ingredients that are required for a data center, and the growth of data centers, not just in the Permian but across Texas, power constraints are being felt everywhere. When you say that, and when you look at the synergies and the ingredients that it takes and what the Permian has, it truly is a transformational opportunity to do it. The behind-the-grid generation, to see data centers come to West Texas, it's going to take behind-the-grid generation. And then when you look at the synergies of waste heat capture off of that generation for use in desal, it's pretty tremendous. And then also just the water component. The water component of, look at the synergies of, we've got too much water in the Permian in form of produced water, and then the demand that these data centers need, and tying all three of those together is truly a tremendous opportunity.
Great. Yeah, no, that makes complete sense. And then maybe staying with you, Robert, just on the desal opportunities, is the goal still 75% volume reclamation, 75% analyte removal at a cost of 75%? And I guess further, now with the benefit of another year of assessment and your progress with phase 2, how confident are you guys in achieving that 75 cent per barrel treatment cost with a commercial scale facility?
With all treatment, scale takes to get to that point. I'll take it kind of 70, each 75 as you go. We're on track on the first two. The 75% volume reduction was 75%. We're trending toward that. And again, mentioned in the call is, that's the testing we're doing right now in North Carolina. When you look at the 75% cost, outside of just scale to get there, and we see that scale and that economy of scale that's required even our traditional treatment used for hydraulic fracturing, the bulk of that 75 cents for any desal technology comes from the energy consumption that's required. And you try to base that at first in a kilowatt per hour, assuming that you're going to tie into line power. And again, it goes even more toward the benefits of going to the nat gas generation. Being able to get that kilowatt per hour cost down via gas and infield gas feed and the generation piece, the 75% is 100% achievable. But we're trending toward all three.
That's great. And perhaps for Ty or Chris, In the press release, you guys mentioned a compelling opportunity to consolidate enormous yet fragmented market for oil and gas royalties, surface and water assets. Where are you seeing the greatest opportunities today between royalties and surface?
Yeah, I mean, honestly, the deal pipeline looks really good. The landscape for 25 looks very good. And we've been looking at, quite a few opportunities both on the surface and mineral side. So, it seems like there are more opportunities for both, on the landscape for 25 than we've seen in the past. And I think we're, going to get the chance to look at a lot of really high quality opportunities. And, there seem to be some larger, higher quality packages starting to come available. So, we are very excited about the landscape as far as acquisitions and, across surface, mineral, and the water space as well.
Terrific. And perhaps thinking about things from a macro perspective with the recent change in administration, could the Trump administration make any federal changes in policy which could open up greater amounts of pore space in New Mexico that would be attractive to industry given the depths of SWD wells in New Mexico in general?
Maybe repeat the last half of that question, Derek. Sorry.
Sure. So could the Trump administration make any changes in federal policy which could open up greater amounts of pore space in New Mexico on federal lands that would be attractive to industry given the depths of SWD wells in New Mexico in general?
I mean, I guess it's possible. I'm not aware of anything coming down the pipeline that is going to help New Mexico from a regulatory standpoint as far as disposals. Robert, I don't know if you are. Do you have any update there?
I don't. And, that would be, again, not aware of anything. That would be a piece we haven't seen to date. But I would say, even beyond any regulatory changes, just the need for an alternative in water, that's outside of disposal, is going to come just from a functional standpoint, even beyond a regulatory standpoint. But I'm not aware of anything.
I think those changes,
Robert,
those would likely be more state level than Fed level.
And correct me if I'm wrong, but I think the wells, generally speaking, on the Mexico side, aside from the regulatory length maybe that would require, or more length that would require from a timing process, those are about 50% more expensive in general, as I understand. Is that in the right zip code?
I assume you're referring to the deeper disposal.
That's correct.
The deeper disposal is, I would say, even greater than 50%. But you've seen a pullback in New Mexico. You saw a pullback on the shallow disposal, 7-8 years ago. You saw a pullback more recent in the last 2 to 3 years that has really seen the overall, disposal capacity in New Mexico decline. But the deeper disposals are significantly more expensive, and due to various, seismic and costs, and really that payback on the deep disposal, when you see a reduction in volume given the capital cost to put one in, you've seen a significant reduction on both sides of the border in deep disposal.
And as my final question for you guys, and just kind of thinking about your 2025 trajectory, referencing your line of sight inventory and recent commentary from industry, how are you thinking about the turn-in line quarterly run rate, if you will, for oil and gas royalties?
Derek, if you look at the current line of sight inventory and you just kind of take your DUCs and your recently completed, 13 and kind of 3, you put those together, you're like 16. I think, the 3 recently completed will, nearly 100% of those, or practically 100% of those, are going to come online during the course of the year. On the DUCs, the timing of those, it's usually 90% or higher that get turned on in the course of the year. And you might even have like 5 or 10% of the permits that also kind of make the full cycle trip in less than a year. So, if history is a guide, if people continue activity levels that we've seen historically, that might lead you to believe that somewhere in the 14 to 15 net wells would get turned in line during 2025, all three of the completeds and 11 or 12 of the DUCs and maybe less than one net permit or something like that. And that would be very robust. I mean, that would probably exceed past years and as far as like a quarterly run rate. So the potential is definitely there for a very robust amount of wells coming online. It's really just going to come down to probably oil prices and activity levels. But as far as the inventory available, very, very strong right now.
All right, terrific. Great update, and thanks for taking my questions.
Thanks, Derek.
Thank you. At this time, this does conclude today's teleconference. We thank you for your participation. You may disconnect your lines this time, and have a great day.
There we go. Texas Pacific Land earnings. Hope you enjoyed that. Everything I heard on there was absolutely fantastic. I'm really, really excited because my Walmart is making me a ton of money this morning. I put out the post on X. If you've not followed me on X, you miss out all the posts. There's my X. There's my Instagram. I bought $39,000 of Walmart this morning on my Roth IRA, a 10% drop. I'm already up on it, $664. I'm not going to sell it until I get $3,000 profit. That could happen in minutes. It could happen in a day or a week. It doesn't really matter. Plus the dividends, if I hold a couple of weeks, then I'll be back in the S&P. Defensive, as I said before, like Coca-Cola is the way forward. These defensive positions are the way forward. If you can get massive 10% drops on an overreaction, it's a no-brainer. So I'm very excited. It's a wonderful morning. I'm like one of my best ever trades. And again, it was posted on my X and my Instagram. There you go. Wonderful stuff. You've just heard one of the best businesses in the world. In my opinion, you actually own the land. Well, guess what, folks? We're just hours away from XRP action. We've got our petition ready to go. We've got everything lined up for you, the interview, everything. It's going to be a huge day today. We're expecting 10,000 watchers live. I'm going to end this stream now. Get ready for the biggest day for XRP and the biggest day on our channel. And to add to it, just to add to it, I'm personally making, I hope everyone took this trade. It was free money, in my opinion anyway. But there it is. It's really, really exciting. Right. I shall love you and leave you. I'll be back as soon as possible. Today is going to be a very strange day. There's a lot to go on. It's going to be our biggest day on the show, biggest day for XRP. So get ready. Have a wonderful, wonderful day. I'll be back soon with updates. Keep your eye on the show. Keep your eye on the button. Until then, as always, take care of yourselves and each other. Get ready for a huge day. Bye-bye for now.